Hi, welcome to Money9 Money Masterclass. I'm Karthik Malhotra, and joining us today on the show is Alok Jain, founder Weekend Investing, to help us all understand the art as well as, if I may say, the science of momentum investing. Thank you so much for joining us, Alok Jain. For a lay viewer, help us understand what is momentum investing.
So thank you, Karthik, for having me on your show. Momentum investing essentially is a different kind of investing versus the conventional investing that most people are familiar with. So this is a rule-based approach where we are driven primarily by price movements. So we are not really forecasting or trying to predict where the stocks will be based on their fundamentals or based on how the situation is changing within each industry, but we are saying that the price is encompassing all that is needed to know in terms of which stocks should be in your portfolio. So it is an emotionless way of investing, because most of the time you would have seen that it is the emotional play which actually makes investing very difficult. So this is sort of a very clean, a non-emotion based, rule based investing system.
Right. So for a lay person, is it fair to assume that momentum investing follows the principle when stocks are purchased as they start their journey going up, and they start getting sold when the stocks start to ebb or start to dip? Is that a fair assumption to make?
Yes, so the whole idea is very counterintuitive. So
Okay.
we are used to the fact that we want to buy low and sell high, whereas in momentum investing we buy high and sell higher. So we are chasing trends within the stock price movements, and we are only buying stocks when the stock price itself is telling you that you should be buying this. So there's no presumption about whether if you buy today whether it will move tomorrow or not, or you'll be stuck with it for many years. So this is basically allowing the price to be the leading indicator versus a lot of lagging indicators like fundamentals, etc., which are backward looking. So if you get a quarterly result of a company, it is telling you what has happened in the last 3 months. It is telling you nothing about how it can pan out in the next 3 months. But the price is a leading indicator. The price tells you ahead of things when they happen, as to where the price of that stock is going. So we basically allow the price to gauge it to be gauged, and let us know when to buy and when to sell. So it
How
is
do you
it
do
is
that? I mean, that is what people try to fathom all their lives. And how do I time a stock, or how do I time the market? How do you get to do that? What is the process of identifying when a stock is likely to go up and when it's starting to fall down?
So essentially, you can build simple rules around it. So, like, just I'll give you a very simple example. For instance, like a stock hitting a 52-week high. A lot of people don't want to buy stocks which are near 52-week high, because conventionally they think it is already gone up and it won't go up more than that. But what you will actually see is that when a stock goes for becoming a multi-bagger, it goes from 100 to 200 to 500 to 1000. It goes through that 52-week high, and only then it picks up the real momentum, for those multi-bagging to happen. So, as I said, it is very counterintuitive. So most generic investors, they will get out when the momentum investors are sort of beginning to come in, and the rule-based system around it helps you in keeping your position sizing and risk management in place. So four questions which you should be always answered, and this is true for any strategy actually, but for momentum specifically, is what to buy, when to buy, how much to buy, and when to sell. So these four questions, if they are crystal clear at all times, you will never have to think twice about your investing decisions. Even when you are pressed against the wall in the most difficult situation, when the rules and your framework is clear, you will get in and get out without a flinch.
So, Alok, help us understand, for the common viewer, for the lay retail investor who's out there on the street, is it easy for him or her to apply the principles of momentum investing? Or do I need to rely on an expert like you every time I want to understand which stocks to buy or sell?
So if the investor is able to dedicate time and have a discipline around following some rules, then definitely he or she can do it themselves. There are two kinds of momentum investing. One is called an absolute momentum investing and a relative momentum investing. That will get deeper into the subject. But primarily, if you have access to quotations of the stocks on a daily or a weekly basis or a monthly basis also, and you're able to tabulate them and you're able to allocate your funds according to the ranking that you will make according to the rate of change of their price, etc. So you could do it, but if services are available which are cheap and which duplicate all this effort for you, it becomes like a 2-minute game per week for you. So our products, for instance, require you to just have 2 minutes of 2 clicks a week, and you are done with your investing. So why do all the donkey work when it is available for a small change?
And you also mentioned that it's all about keeping the emotions out. So, for a person
Yeah.
who's investing his own money into the markets, keeping emotions out sometimes, even if the science is telling you something else, becomes difficult. So, is it absolutely
Yeah.
imperative that at a time like that, we have a fund manager or we have an advisor, a registered, SEBI registered advisor, helping us navigate through this journey?
So investing at the very core of it is a very personal thing. So you will need to have the the confidence and the and a conviction that this strategy works. This strategy has been working for 200 years. So there is no reason to believe that going forward it won't do. So find a good manager, invest with him, and then you need to basically train your mind over several cycles of the market that this works, because it is counterintuitive. It won't come so easy. It is simple, but it is not easy. There's a difference between the two.
Right. So, what is the best way to go ahead and exploit this concept of momentum investing to the hilt? So, direct stock picking, of course, is one thing, but that requires, like you said, 2 clicks a day, 2 clicks a week. Are there mutual funds that help you take advantage of momentum investing, or small case is something that is being looked at in great detail now? What would be the best way for a retail investor to actually exploit this concept?
So if you actually see on a granular level, even index investing is a way of momentum investing. The index gets churned every 6 months, and they will
Right.
churn out stocks which are not doing well, and bring in the stocks which are gaining momentum. So index investing is also a format of momentum investing. Then you now have some momentum funds which are tracking the momentum 30 index. So that is another way of going through it. And in small case like scenario, there are many advisors there who have momentum products. So we have like 6 or 7 products there suited for different sub-segments of the market. Some looking at only small caps universe, some looking at all cap universe, some looking at all-time high universe. So different styles of momentum investing, just like fundamental investing can be done in thousands of ways. Similarly, momentum investing does not also have one way of doing it. You can do it in several different ways, but the core engine remains the same.
Right. So we've got about 100 odd live viewers with us, and we are also getting some questions. And Alok, we've got one question coming in from Newton Biswas. If we can pull up that question, Newton says, "Hi, I've already invested by weekend investment. I have a question. What will be the suggested SIP amount for investment in a small case MIST?" Would you like to take that on, Alok?
So SIP amount will be dependent upon their financial plan, individually. I don't think I would be able to comment on that. But the small case platform allows you to have SIPs as small as 5,000 rupees also. So you'll need to work out with your financial planner about the SIP that will suit you the best. But it is that SIP potential is possible there.
Right. So, Newton, I think it's important to still follow goal-based investing, even if you're looking at momentum investing. That's what Alok is trying to tell us. And it's important to know your goal, and basis that goal, your monthly investment amount or the SIP
Correct.
that you want to do comes into play. But yes, it is a possibility if you were to invest even using small cases. Alok, we've got one more question coming in, and this is from Atul
Sure.
Kumar. Atul is asking us, do momentum strategies work across assets? Given the recent surge of investors in crypto, would you consider starting momentum investing in the same? So crypto, of course, for all our viewers, has not really been is not regulated in India right now. In many other parts of the world, yes, crypto has been defined as an asset class, not so in India. So, hello, crypto and momentum investing, will they go hand in hand?
So momentum investing is a generic way of investing. So any asset class works with it. You are basically saying that if there are 100 or 5,000 units of vehicles available, you are staying with the strongest of them. So it can be done with cryptos, it can be done with stocks, you can do it in commodities, you can do different asset classes together and see dual momentum between them. So this is very generic to the core, and this can be done with any asset class.
Right. So we also have a question coming in from Srinivasan, and Srinivasan is asking: is momentum investing possible even for foreign stocks through small case? So, like you said, of course, momentum investing is a principle valid across all asset classes. But specifically, I think he wants to understand if momentum investing can be exploited sitting in India to invest in securities outside of the shores of India.
It certainly can be done. Small case currently looks at only National Stock Exchange listed stocks as the coverage that they have for the stocks. So whenever they will allow overseas stocks to be included in the small cases, then it will happen through small case. But there will be other players like small cases who will allow baskets or small cases on foreign stocks. We will definitely be exploring this in the coming quarters, how to provide momentum based baskets for the US markets.
Right. We'll take one more question, Alok. This is coming from Samarth Pandey, and he wants to understand from you that in case somebody were to pick up stocks directly all by themselves, what are the strategies to follow? So, momentum investing, of course, you said is something that investors, if they are well seeped into the concept of investing and have the time and the resources, can do. But what other principles should people keep in mind?
So conventional investing also works very well. I mean, you could look at growth investing, you could look at value investing. Whatever is the conviction that you have the most in whichever way, you should do that, because borrowed conviction does not work in the market. You need to be convinced that your method, your principles, your rules would have worked in the past had you applied them, and will work in the future now that you're applying them, and that those principles actually have a lot of historical data and back test to support your concept. So you have to basically study each and every class of investing, different styles, trading, investing, do educate yourself, and then see what is suiting your personality or your behavioral bias the best. I mean, some people are very good at being patient, or they are happy to sit in a drawdown of 50%. Others don't want to see any losses. They are wanting to stay with strength. So it is a very unique sort of thing that comes to you when you experience everything. And once you have experienced everything, then you can eliminate by rejection, this is something I don't like to do, and this is something that I really feel comes naturally to me. So that's the way you should approach it. All strategies, all kinds of investing systems work, but it needs to be tailored to yourself.
Right. There's also another question coming from Farhan, who seems to be unable to keep his emotions out of investing. And his question is that that it is slightly scary to do SIP in stocks when they are very high. So, is there an ideal time to do that? How do you keep the fear of investing when markets are at a high or stocks at a high? You want to take that, Alok?
Yes, so this is a very natural and common feeling to have, and that's what I said when I say that it is, unconventional. So you will feel scared when you are at a height, but when you practice you'll be at heights at many times, you'll start to lose that fear over time. When you will see that being at heights is not harming you, in fact, it is helping you. Because if you are at a height and you have a parachute, you feel much safer than you may be at a lower height and without having any parachute. So it is basically a mental practice that comes over time. You can start small, you can gradually build it up. You will see when the market falls, when the market goes up, how each style is performing. And over time, you will be able to realize the importance of, even though you are being at a high level entrant into the stock, how you can multiply your funds by staying with the strength in the market.
So you mentioned parachute, but last year what we saw, Alok, was a crash landing of sorts of the markets. So the parachute might
So
not always be there. So is that where the fear of investing when markets are at a high comes in?
So a very good check would be to go and see what a momentum portfolio did in March 2020. If everything else was crashing, please go and see what momentum strategies like ours were doing at that time. We were able to come out with those from those crashes at a much earlier pace and sit in cash while the market kept falling. So the whole idea that if you are at 100 rupees and the market starts to fall and you are able to get out, let's say at 80 rupees, and the market falls to 60, that climb back from 60 to 100 for the market is very, very tough. It's a 50-60% rise that is required to even come back to your original point. But if you are sitting at 80 and you get a 50% jump from there, you'll go to 120. So the whole idea is not to go into deep losses. Once you go into deep losses, it is very difficult to climb back up. It's like you fall into a shallow hole, and you get out of it, and you walk across. But if you go into a deep crater, it is very difficult to get out of it, and you can spend time and a lot of effort to come out of it and still not gain anything net. So the whole idea is to let your winning trends run and cut your losing trends at the earliest.
Right. But for a first time investor, what would you suggest? Since you mentioned that index investing is also momentum investing, for a first
Yes.
time investor, do you think it is safer to just park your money with an index fund, let it grow to a certain point, and then gain the confidence of dabbling outside of index funds? Or is it absolutely
So
safe to go ahead and buy a small case of momentum investing today as your first investment?
So first investing, I still think should happen with mutual funds or index funds, because the ticket size that is required to come into many of the strategies like we have is like 2 to 3 lakhs, so which a lot of people may not be having. So idea is that you should build some capital, get the experience of the market, get your feet wet, try and experience new things, and then once you have sufficient capital or substantial knowledge about it, then you can take the next step and go into specialized strategies like ours.
Right. And even within your portfolio, especially on the small cases that I was studying, there are certain indices that you have included, and you are following
Yes.
the same momentum philosophy there. Especially one that sounded really exciting to me was your Nifty Next 50 top 10
Yes.
stocks. So
Yes.
talk us through an
Okay.
application of a concept of momentum investing in the scenario of index funds.
So, like Nifty Next 50 is an index just like the Nifty 50 stocks, but it is the next 50 stocks. So, the
Right.
first 50 top market capitalization is Nifty, and 51st to 100th stock comes in the index called Nifty Next 50. So, these are the next best 50 stocks in the market, you can say. So what we do is that we run a momentum strategy called NNF10. So it's Nifty Next 50 10 stocks, which essentially picks out the 10 strongest momentum contenders from these 50 stocks, the Nifty Next 50 Index 50 stocks, and allocates equal capital at 10% each to each of them at the beginning of the month. And then at the end of the month, we recalculate what is the momentum strength in these 50 stocks. And in case some constituents have dropped below, we will exit those, and we will bring the ones who have the relatively better strength now. So what this does is it is sort of like survival of the fittest theory. So each month you will take out some of the weaklings from your portfolio, and you bring in the stronger stocks. What that does is, in very strong uptrends, like currently we have the market, you will see that your 10 stock portfolio will do much better than the 50 stock underlying index, because you are only playing the strength part of that index and not allocating to the weaker part of that index. And in falls also, when the index is falling, the stronger part of the index will not fall as much as the weaker part of the index will. So you are gaining when the market is going up, and you are relatively gaining when the market is going down. These two combined together give you a CAGR which is much better than the index. So this is how we manage to run a index like strategy, but with much better performance.
And how would you rate the performance? You're seeing much better performance, but during the time span that you have calculated the CAGR, how has this particular small case of yours performed versus the Nifty Next 50 index itself? Could you give us some
Oh,
data around
it's
that?
Yeah, so that the difference is very stark in the last 10 odd years, and some of it is back test, and some of it is live running of this strategy.
Right,
The Nifty Next 50 index would have yielded somewhere close to 11 to 12%
right.
CAGR, and this strategy would be near about 19%.
Right. So 19% versus 11-12%. So the delta is fairly huge. Right.
Delta is
Alok Jain,
huge.
thank you so much for joining us. Thank you for taking our time. There are a lot more questions coming in, but we understand you're pressed for time. So we'll leave it at that today. In fact, a lot of questions that we are seeing are on small cases. So a lot of people would want to understand from you
Sure.
about their strategy to explore investing in small cases. We'll bring that topic up soon with Alok. Alok, if you can promise our viewers that you're going to be back with us, and we'll take that
Sure.
on another episode. But
Thank
thank you so
you.
much, viewers, for joining in. Thank you
Yeah.
for all your questions. Keep them coming. Of course, this video is going to be there on our YouTube channel, so you can come back to it, refer to it at any time you like. And yes, we will get Alok back. So thank you so much, Alok. Thanks for this wonderful session on momentum investing. That's a wrap on this Money
Thank
Masterclass.
you.
Have a nice day. Bye bye.